I will do a quick video about the last position that I took basically, last Friday on EURUSD during the New York session, which basically gave me pretty much, amazing results. A lot of, what's the correct term? Curiosity, I guess, right? Arised why and how I basically took my position from where I did, and I wasn't aware of any news coming out whatsoever. I was just basically following my rules, concepts, strategies, and system. So imagine my surprise when I basically entered at exactly the right time before price basically melted down on EURUSD. Without further ado, let's dive immediately into it. I have prepared some screenshots here, presentation now. First, let us start here with my overall week, and as we can see, I had a pretty decent week, and I had 1, 2, 3 losses, and overall, all the other positions I took basically hit all their TPs, right? And so this is basically how the 50-minute charts look, right? And I obviously entered here, right? And my initial target was here, but I got out early here. Now I was even considering, and we will see that on the lower time frame, that this here wick is basically acting as a POI, right? And as we can see, price came and basically reacted from that area. Now price can do one of two things. I think if this is a potential choke and we have here some internal bullish liquidity, then obviously price may do something like that, go a little bit higher, excuse me guys, and then target some internal bearish liquidity before perhaps even continue down, or go all the way back to create some efficiency at this here order flow, right? Because price obviously did not close below this low, so it did not confirm any BOS to the downside just yet, right? So be cautious when the markets open, but that's not today's topic, right? So let's move on. Now let's have a look. Yeah, so basically the same scenario here, the overall picture on the 15-minute time frame, right? And here, from the 3-minute time frame. Now I even go to the 1-minute time frame, because basically I took my position here from the 1-minute time frame after basically seeing everything that happened here, right? So obviously with the naked eye, some may wonder, what the hell was it that you were seeing that you decided to enter here and even scale in 2 times, right? So I have 3 times a identical position, right? And we will see that price came, triggered my first limit order, and then before coming down, right, I went with a stop order, and then before price again came back, right, I went with another limit order, and then look at this candle, right? This was obviously a news candle from what I have understand afterwards, right? But we will get to that, right? So let's have a look here. Yeah, so basically this is the, let's call it clean chart, right? Now I have prepared some screenshots which will basically show how others perhaps may have viewed the market, and we can and will utilize that to our advantage, right? So when price here took out the previous daily high, right, which is also our higher time frame major inducement, right? This is basically what I saw, right? Oh, excuse me, right? So imagine how many traders saw this as a BOS to the upside, right? Because price obviously closed above it. Perhaps even they may have seen this as a BOS if, you know, they had any eyes on that level. If not, they definitely would have seen at least this year as a BOS to the upside, right? Now, from that point, two possibilities for those, well, order block buyers, right? Here, obviously, with their decisional order block, I guess, right? Because it was basically here where the strength came from, you know, to create that BOS to the upside in their minds, right? Not only that, because also we have some, you know, imbalance here, which technically was filled, but, you know, nevertheless, they will see this here also as a imbalance. So imagine that their stop losses are collected here, right? Which, you know, obviously price smashed through it, right? And went to this here. Well, let's call it liquidity area, right? Because again, all the stop losses of those buyers who bought from this here extreme order block, right? Because again, this one definitely has still some imbalance, right? So if this one may have been a decisional entry, this one being the extreme, or in their mind, high probability entry, right? Now, obviously, price smashed right through it, collected first the stop losses here, and then came into this order block, right? Smart money trap to us, gave a reaction, right? And then basically hunted those stop losses here. Now, why went price immediately to that area here? Well, probably because there were more entries or stop losses collected here than in this here decisional one, right? That's why price did not give any reaction or, well, you know, of that kind, right? So this was basically what I saw or noticed immediately. So I thought, well, okay, now all the stop losses are collected, all the buyers are stopped out. What do you think now will happen, right? I think, in general, most traders now will say, okay, look at this. We got stopped out of our buy position, so now, you know, this was just a fake, or however they call it, right? But now they are looking as a BOS to the downside, right? And then they see this here area as their, well, quote unquote order block, right? Because that is where the strength came from to, you know, here take out that low, right? So, and that's why price again reacted from that area, right? Presumably, right? Price came here, triggered all those orders, right? And then again went higher to take out their stop losses, right? Now, if we then would move to the next screenshot. Yes, sir. Now, this here is from my perspective. Right now, I got asked, okay, Attila, why didn't you enter from around this here area, but why did you enter here? Well, that's a very good question, and I will do to the best of my ability to explain it to you guys. Not too technical, you know, but in a way, how can I say it, simplified, right? Because I already missed a position here, a position here, right? And I will show that to you guys also, why I could have taken positions here and here. But to be perfectly honest, I was not behind the charts when that happened, right? I was when price got here, right? And because I did not see any, well, obviously sell setups either here or here, I went away. And when I got back, right, price was already somewhere around here. And that's why, you know, even missed my positions here and here. I decided to enter here. And, you know, looking back at it, I am glad that I did, right? So let's get to it, guys. Now, from my point of view, right, we have taken out here our previous daily high. Again, which happens also to be our higher time frame major inducement. So I got interested in sells, right? As I mentioned earlier, when I posted the ideas and all that, right? So in this case, I would wait for a internal shock, which happened at this point, right? Now, obviously, we can say, well, because we got a major liquidity liquidated here, one can even say that this could be a potential shock, right? And technically, you are not wrong, but to me, this is basically, you know, how can I say it? Microstructure, I guess, right? Because we had here that microstructure, which in return came here, closed above that, right? And that's why I see this here as my, well, you know, it's, you know, again, up to you guys, but I think this would be a more aggressive way and this a bit more conservative way, right? So I leave that up to you. I mean, technically it's not wrong, but if you want to play it a little bit more conservative, then better focus on this here area, right? Because to me, well, this is basically already my, how can I say it, structure, right? So at this point, I got my internal shock, check, right? Also, look at this, New York open. What did price do, right? After it opened. So basically, it took out also the London high. While doing so, it took out my previous daily high, again, which is also happened to be our higher time frame major inducement. And now I got my internal shock, right? So it, yeah, started to line up, right? To look for a position. Now, at this point, I noticed, okay, we also have our internal liquidity. Now again, this year we can use as a liquidity because our major structure, higher time frame liquidity got taken out here, right? So that is definitely something to notice. Now, at this point, price came, all right, and I could have done one of two things, right? I could have decided, okay, let's make a decisional entry here based on a single candle mitigation entry. And the way I would have done it is, okay, it was this gray candle that basically took out internal liquidity here, right? Price cut can do one of two things. Either it will continue higher to create, efficiency here in this fair value gap, and also perhaps come and create efficiency here, right? I mean, here filling up the imbalance and here creating efficiency. Yeah, correct me. That was one scenario, right? The other one, this is obviously the more conservative way, right? But the more aggressive scenario, and in this case, a valid one, right? Would have been, okay, if price now indeed came and took out liquidity. That's a very ugly line, sorry, like that. Yeah. So it was this candle that took out the liquidity. Now, if I wanted to enter aggressive here, using the single candle mitigation entry, I would have waited until either this black candle would have closed below it, and if not, perhaps one of the next candles, right? But a candle close below it is, definitely a must. And then I can basically use this here entire area as my entry point, right? Aggressive, yes. Decisional, yes. Because again, price still may continue higher, right? To fill up this imbalance and to create efficiency here, right? So now I could have decided to do that, but obviously since this candle did only a liquidity sweep and not a close below it, that, well, aggressive decisional entry plan was in this case invalid, right? So after noticing that price not closing below it, but instead going higher, right? I noticed, okay, it comes into this here fair value gap, right? And it comes into this here extreme POI, right? This being a decisional, this being a, well, extreme higher probability POI, I guess, if you can say that, right? Now, obviously, at that point, I was looking for reactions, right? And again, it was basically this black candle that topped out within our PY, right? Not only that, it also took out the previous gray candle, which closed in or within the POI, right? Now, again, I can do a couple of things here, right? If I'm, again, aggressive, I would have waited until this here next gray candle or one of the next candles would have closed below it. Now, if this here, Dragonfly Doji, instead, only wicking through, if it had closed like this, I would have considered a aggressive entry here via a single candle mitigation entry, right? That is one scenario. And now I would be more confident to take an aggressive entry at this extreme area if, price action would have given me the proper setup to do so. But again, it failed to do so. It wicked through, meaning it may continue higher, right? Now, another scenario is based on shock or flip or, supply to demand, however you want to call it. I mean, in this case, demand to supply, right? Which means if price fails to close below here, it may perhaps indeed continue a little bit higher, give a reaction here, right? And then come down. And while doing so, everyone will think, okay, we have another BOS here, right? And they will see this as their order block, right? Put their stop losses below it here. Yes. And then price comes here back. It creates efficiency at the candle, which topped out here, right? And if then I see something like this happening, I could definitely consider an aggressive entry here, right, via single candle mitigation. Or if you are more conservative, you will wait until price comes here, collect those stop losses of the buyers, and now this entire area, my order flow, right, if price now comes back in that order flow, yes, then I would look for any kind of lower time frame. Well, we are on the 1 minute already, so I wouldn't look for any kind of candle-wise liquidation, and then if the candle closes below it here, I will go with a single candle mitigation entry here. Now, why is this important? Because then we have that flip entry or demand to supply, right? Because this demand will fail, right? At this point, again, if you are aggressive, you can consider to enter here. If you are more conservative, you wait until those stop losses of those buyers here are collected. Price comes back into this order flow, perhaps even here a PUI, right? Let's say price is a little bit, more simple, like perhaps, I don't know. Let's go back a little. Yeah, like price does something like this, right? It goes a little bit higher, and then it does something like this. It collects those stop losses. Now, usually you will say, well, what about this, right? We have liquidity. Don't we have to wait until that liquidity is taken out? Well, obviously, that is what we prefer, right? But remember, guys, we already had liquidity taken out here on a structure-wise level. Plus, we have, at this point here, also a structure-wise entry model, right? So here, buyers are triggered, right? And then it fails to hold that demand level. It collects those stop losses. And now if price comes back into this area, instead of waiting for a liquidation, we can technically wait for a mitigation. And then again, single candle mitigation should this candle with where it tops out take out any other previous candle here, like it happened here earlier, right? If that happens, then you can decide to enter here, right? You don't have to wait per se until liquidity here is taken out from this move, like that. I mean, if it happens, yeah, then obviously we have a higher probability. But in this case, a mitigation instead of liquidation is also fine, because we had a major liquidation here, which was previous day high, also our high time frame major IDM, we had a internal liquidation here. So basically at this point we don't have to again have a liquidity point, right? Just mitigation, single candle mitigation entry, and then just go with it, right? So yeah, but let's not deviate here because I did not see any entry confluences here or here, right? I did not enter from those areas. That's basically the simple answer, right? And also, guys, not to mention, I mean, not to forget, remember, even if all the stars had aligned and we did have a picture perfect entry model, or, you know, candle-wise confluences at this point here, then, you know, I would have been very cautious, because remember, guys, here are stop losses collected. Yes, if I go back on screen, yeah, remember this, guys, because imagine how many traders are waiting here for a sell, right? So all their stop losses are collected here. So I would still be a little bit cautious, you know, even if I did got a single candle mitigation entry like this, right? Or if a you know, flip entry would have been played out like this, then I would have still entered, right? But you know, none of that happened, so I had to be patient. But now this here area had my attention, right? I mean, afterwards, since I obviously was again not behind the charts, and I unfortunately missed the entry at this here pinnacle point, but it definitely had my attention, and it also resulted in the fact why I entered here, right? Because everything above here is basically either liquidated and or mitigated, but we will get to that, guys. So yeah, let me go to the next screenshot. Yes, sir. Now, look, this was basically what I saw, right? Okay, so here we had a liquidity sweep, right? Or, you know, basically a trap, however you want to call it, right? Price pushed a little bit higher, pulled back a little bit higher, yes? And then what happened, right? We had our internal shock. While doing so, it left liquidity behind here. It came back, it closed very minor below the candle that did the liquidation here, and then it came back, single candle mitigation entry, sorry. Later on, I also noticed that, basically, I also missed an picture perfect entry here, right? Because liquidity was created at this point. We had that BOS to the downside from this here move, right? Liquidity was taken out, low got validated. After price closed here, it basically confirmed our BOS, and then this was that pullback after that BOS to the downside. This move did not take out that liquidity there, and then it basically continued. Now it created a new liquidity internal point. Price came, took out that liquidity, while doing so mitigating this here POI. Now, why is that one important, right? Because this black one here, right, that one closed below it, and we had a very small fair value gap here, right? And in fact, I believe it went for that fair value gap, or perhaps it may missed it out, but nevertheless, right, that's why this here POI could definitely you know, act as support for a potential entry type model 1 here. And again, right, we have both liquidation here, mitigation here by this candle, wait for this price to close below it, and then just go with a single candle mitigation entry here. So basically, second entry missed, right, around the pinnacle point, but that's okay, right? At some point, I basically came and saw when price action was about around here, right? So then I basically, you know, went here. Now look at this, guys, right? I mean, I hope it does not get too confusing or anything, but look at what happened here. So basically, we have now our internal structure, something like this, right? Yeah. So because of these, let's say, micro liquidities, right, took out, and in replace we had that replace structure, namely internal liquidity, right? So basically this was that single leg to the downside after this year, pullback or corrective phase, right? And within this year's single leg, we had basically here our microstructure, and at this point that microstructure basically confirmed this as a low, right? Because that microstructure here was taken out. But look what happened, right? Price came, it did not close below it here, right? Now had price closed below it here like that, now this move here would have been my replaced internal structure, right? Yeah. So far I'm making sense, I hope. Since price did not close, below this low, where it basically got validated by this move, right? And because it only did a liquidity sweep of it, right? And while doing so, it took out this year most recent, how can I say it, microstructure. So basically when this happened, this was now that validated low, and because price did not close below this low here, technically what happens, this low moves to here, right? Or in other words, this low replaces this low here, right? So now we have that pullback, and now this is basically our single leg, right? And I believe I do have it also marked out on my next screenshot. Yeah, like this, right? So basically, if we look at our internal structure, we have something like this, right? This is our liquidity point at this point, yes? But, if we look within this here single leg, remember, even though that price did not close here below this low, right? This low got somehow, validated by this pullback, right? So if this here is my single leg, right? Because this low got validated with this move to the upside, I can identify this here basically as my, internal structure, right? Within this here single leg, right? And that's why, let me go to the next screenshot, I have basically filtered out those micro structure thingies going on here, basically into this here, right? Internals. Yes. And now I basically noticed, okay, look what we have here, right? So price came, it took out internal liquidity, right? And while doing so, it basically reacted from that area. Look at all these wicks here, right? And then I basically got interested because at this point, I will show you guys, yeah, it was not only that liquidity sweep here, of which none of the candles here closed above it, right? But it was also, look, where price reacted from, right? I mean, it's very hard to see, perhaps. Perhaps I should, if I have the ability, yeah, like this, right? Look at this candle. The price reacted just perfectly to this here candle, which had obviously from this point to this point a huge fair value gap, which obviously at some point was retested here and obviously also here, right? But my point is, after this black candle took out liquidity here, right? Price closed below it, price came here. It was this gray candle that topped out within our POI. That one in return took out the previous candle liquidity, right? And then price basically, this one mitigated that one. So this here black candle was technically the only unmitigated candle from this whole area after liquidity was taken out. And after seeing price reacting perfectly to it while taking out liquidity here, and as soon as this here candle closed below this candle, which kind of topped out after taking out liquidity and creating efficiency here from this here candle, it was for me basically a no-brainer, right? I basically went for a single candle mitigation entry. When it came, it triggered my limit order. Before it went down, it triggered my stop order, and then when it came back again, right, to basically mitigate this here wick, right, because this one in return took out that one, right, and that one basically created efficiency here, right? So it would make sense for me then to go with another limit order just in case if price comes into that wick. And well, obviously it did at this point before continuing down, right? So yeah, that's a very good thing to see. But again, it was not only, the fact that I recognized, okay, I have missed a potential entry type 2 here, I have missed a entry type 1 here, and, if we look at the next screenshot, guys, basically, yeah, here we can see, right, I had marked this as my internal chalk. Right after these candles closed below this one, I basically saw this as my single candle mitigation entry. Right after liquidity here, basically of this internal structure, like was taken out. Right, and then this was, yeah, like what made this here area even more, interesting was, for me to enter, is because look at this, right? Let these represent the order flows, right? This was the last bullish push to the upside, right before price closed or took out that low, right? And then what happened? Price basically came, created efficiency within that order flow. Within that order flow, we had our liquidity, which also was taken out, a single candle mitigation entry, right? So if we can train our eyes to see these kind of things happening within order flow areas, it may definitely benefit your approach also in these kinds of strategies, right? And then what happened after that? This bullish push, which created efficiency here. Price now took out this low. So basically what happened after that, right? Price closed even below it. It came back and it again created somewhat of a efficiency within that order flow. Now within that order flow we had obviously liquidity sitting, right, but price did not come and take out that liquidity or whatsoever, probably because at some point if some traders saw this as a BOS to the downside and had entered here or had pending orders here waiting for potential sells, right, then obviously their stop losses would have been collected here. Then price, I think, is more likely to come here, trigger those sells, collect those stop losses, while doing so taking out liquidity and then continue down. So the only reason I can think of why price did not continue higher here to take out this here most recent liquidity was because there were not enough sells around here. That's why it gave just a reaction after it created efficiency within that order flow and then pushed down, right? And now what happens here, right? So this push to the upside becomes our inefficient order flow as soon as price takes out here below this low, right? And then again price comes back, create efficiency within this order flow. While doing so, it did create a liquidity just like how it did earlier here, where here it did not liquidated it. Now here it did came back within that order flow. One, it created efficiency. Two, it took out liquidity within that order flow. 3, it created efficiency within this here unmitigated price action within that order flow or POI, right? So and then what happened, right? So price came, okay, so basically efficiency, right? And then price basically closed here, right? Let's say this push to the upside, it came, and then something like this happened, right? So technically this then would be, well, let's call it the order flow, right? And then as we can see, right, price basically closed here below that order flow like that. It came back. Now while doing so, right, it basically took out here liquidity, right, technically even here, right, from this move. But this is a good example also of why I trade not too much on these microstructures. I use them to identify my internal structure like this in return, right? If this is my micro, this is my replaced internal structure, right? Like that. I use them to identify that, but not for entries of such kind, right? Because now we have liquidity taken out, price comes here in this POI, right? I mean, yeah, we can use it, right? If this one fails, I mean, you still would have been following your rules, concept, strategy, system. I mean, it all comes down to the trader. If you utilize micro areas of a structure, internal, major, or external, whatever, you know, you feel comfortable with, right, to do so. And to be honest, you know, sometimes I also will utilize those microstructure areas, but only obviously if they are supported with a structure-wise entry type model, and only if they are happening at a pinnacle point, like liquidity, internal chalk, here liquidity taken out, and you know, everything that supports basically the idea, so to say, right, to do so on this here area. Yeah, this is basically how I called my entry, guys, and I hope it makes sense to you. And in case anyone has any questions whatsoever, feel free to ask them, and I will do to the best of my ability to answer them properly. Thank you, guys.